Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list you're ever going to need as a dividend investor. Last week, I gave you 5 fantastic dividend stocks that don't suck, and this week, I'm back for part 2, aka 5 more dividend stocks for the month of August that don't suck. With this list, if you determine that any of these stocks are right for you and you're here on time, you'll be able to buy these stocks and get the next dividend really soon, as all the stocks mentioned in today's video are going to have an ex-dividend date of this coming week. Now, I know all that sounds way too good to be true, but I have something even better to tell you. All the information in today's video will be provided to you at the low cost of free $99, and all I'm asking for in return is to make sure you're subscribed, leave a like on this video to show your support, and then use the comment section down below to let me know what you think of this week's list. All that's simple enough, so now let's go ahead and kick this week's list off with number 5, Nexstar Media Group, stock ticker NXST. NXST is a quarterly payer in the communication services sector, paying $6.76 per share per year with a forward dividend yield of 3.69%. NXST has been paying and growing their dividend over the past 12 years. They have a 3-year dividend growth rate of 34.13%, a 5-year dividend growth rate of 29.81%, and a payout ratio of 41.62%. At the time of recording, Nexstar Media Group was trading 2.11% off of their 52-week high. They have an ex-dividend date of August 9th with a payout date of August 23rd. And looking here at this chart, you're going to be able to see the growth of $10,000 both with and without dividends being reinvested. Up at the top, while reinvesting those dividends, NXST would have turned into $47,394.60, while the S&P 500 would have brought back $32,919.53. That's a difference of $14,475.07. Down here at the bottom, without reinvesting those dividends, NXST would have turned into $43,152.77 compared to the S&P turning into $30,245.68. That's a difference of $12,907.09, and the difference between reinvesting and not reinvesting those dividends is $4,241.83. Next up, coming in at number 4 this week is a stock I personally own in my Retire Early account, and that's Visa, stock ticker V. Visa is a quarterly payer in the technology sector, paying $2.08 per share per year with a forward dividend yield of 0.8%. Visa has been paying and growing their dividend over the last 16 years. They have a 3-year dividend growth rate of 16.85%, a 5-year dividend growth rate of 15.93%, and a payout ratio of just 18.77%. Now, at the time of recording, Visa was trading 10.83% off of their 52-week high. They have an ex-dividend date of August 9th with a payout date of September 3rd, and we get the same chart here. Up at the top with the dividends being reinvested, Visa would have brought back $52,052.22, outperforming the S&P by $19,132.69. Down at the bottom, without reinvesting those dividends, Visa would have still brought back $50,527.44, which outperforms the S&P by $20,281.76, and the difference between reinvesting and not reinvesting those dividends was $1,524.78. And this next one's a trash company, literally. Coming in at number 3 is Waste Connections, stock ticker WCN. WCN is a quarterly payer in the industrial sector, paying $1.14 per share per year with a forward dividend yield of 0.65%. WCN's been paying and growing this dividend over the past 14 years. They have a 3-year dividend growth rate of 11.54%, a 5-year dividend growth rate of 12.36%, and a payout ratio of 20.9%. At the time of recording, Waste Connections was trading 4.01% off of their 52-week high. They have an ex-dividend date of August 7th with a payout date of August 22nd. And with that $10,000 invested while reinvesting the dividends, WCN would have brought back $58,770.94, outperforming the S&P by $25,851.41. Down at the bottom, without reinvesting those dividends, WCN would have still brought back $56,401.90, outperforming the S&P 500 by even more at $26,156.22, and the difference between reinvesting and not reinvesting those dividends is $2,369.04. And we're now halfway through this week's video. If you guys haven't already, please remember to leave a like on the video as it helps me continue to grow my channel, and then use the comment section down below at the end of the video and let me know if you own any of these stocks and how they're doing for you, and if you don't own any of them, did any of these stocks pique your interest? But now, let's get to number 2. Coming in at number 2 on this week's list is FS Bancorp, stock ticker FSBW. FSBW is a quarterly payer in the financial sector, paying $1.08 per share per year with a forward dividend yield of 2.48%. FSBW has been paying and growing this dividend for the last 11 years. They have a 3-year dividend growth rate of 29.02%, a 5-year dividend growth rate of 28.6%, and a payout ratio of 24.25%. At the time of recording, FS Bancorp was trading 3.71% off of their 52-week high. They have an ex-dividend date of August 7th with a payout date of August 21st, and that $10,000 investment while reinvesting the dividends into FSBW would have brought back $60,669.40, which outperforms the S&P 500 by $27,749.87. Down at the bottom, without reinvesting those dividends, FSBW would have brought back $56,165.06, outperforming the S&P 500 by $25,919.38, and the difference between reinvesting and not reinvesting those dividends was $4,504.34. And you made it. Number one on this week's list of stocks that don't suck for the month of August is Brown & Brown, stock ticker BRO. BRO is a quarterly payer in the financial sector, paying 52 cents per share per year with a forward dividend yield of 0.52%. BRO has been paying and growing this dividend for the past 30 years. They have a 3-year dividend growth rate of 11.69%, a 5-year dividend growth rate of 9.9%, and a payout ratio of just 13.07%. Now, at the time of recording, Brown & Brown was trading very close to their 52-week high, just 0.09% off. They have an ex-dividend date of August 7th with a payout date of August 14th, and the $10,000 investment into BRO 10 years ago while reinvesting your dividends would have brought back $69,454.74, more than doubling up the S&P 500 and outperforming by $36,535.21. Down at the bottom, without reinvesting those dividends, BRO would have turned into $64,901.52, still doubling up the S&P 500 by $34,655.84, and the difference between reinvesting and not reinvesting those dividends is $4,553.22. With that being said, if you made it here to the end of the video and you're watching this video on or after August 5th of 2024, you might want to make sure that you have that subscribe button clicked along with the bell, as some of the ex-dividend dates I mentioned in this video might have already passed, meaning you just missed the next dividend for these companies. Now, of course, that's not the end of the world, but all these stocks I mentioned in today's video do pay quarterly, which means if you just missed the most recent dividend coming up, you have to wait 3 long months before the next dividend, and that's not the point. So make sure you come back every Friday at 8 a.m. Central Standard Time with every week's fresh list. And remember, before you go, use that comment section down below to let me know if you guys own any of these stocks and how they're doing for you, and if you don't own any of them, which stocks from today's list pique your interest the most. And if you like the style of this video and you want to see the 5 super high quality dividend stocks I mentioned in last week's video, check that out right here. But until next time, see ya.